do not get distracted. And the better way to say this is do not allow them to distract you, right? Do not allow these people to distract you with some kind of football game over the weekend or something like that. You need to be prepared coming into this week because we still have a huge amount of implied volatility. I'm sure you're looking at the screen right now and seeing how there is a big range for this week, meaning there is a ton of implied volatility still going on into this week into GameStop earnings. And a crazy thing about that is GameStop actually had below 100% implied volatility for a while there, and now it's up randomly towards 200%. And on the other side of that coin, we actually see the biggest increase in implied volatility this week is actually going to be Nvidia. So we could be seeing some interesting stuff on that side of the tape. We have to do some technical analysis today for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta, looking into AMC and GME because that stuff could get interesting this week. So we have a lot to pay attention to, and let's get into it. Got to give you those weekly expected moves for the SPY here on your screen. We do have that upside of 554.69 to the upside, and we do have that downside of 526.03 to the downside. So we still have a massive range, and that's why you need to be paying attention and don't get too distracted. Yes, have some fun over the weekend, but as you're watching this video, you know, it's good to have a book out. It's good to maybe take some notes on your screen, anything like that, things that you need to be paying attention to that relate to your trades. But when you look at things like the SPY and the Qs, it's just good to pay attention to them all the time to see where the general markets are going. And so we have to say there's going to be a huge amount of implied volatility. Now, is this just coincidence that it happens to be happening around GameStop earnings and Nvidia's implied volatility happens to increase dramatically during GameStop earnings? I think it's kind of a fishy thing, but we'll get into that later on in the video. If you need the weekly expected moves for every stock that we're covering, including AMC, GME, Nvidia, and we actually added GLD to that list, you can get those down in the description. These are your 68% zones, and they're rather large. As far as the daily expected move for the SPY tomorrow, we do have 546.47 to the upside, and we do have 534.25 to the downside. So key first thing we're going to talk about here is what could happen on Monday, and something interesting, you know, we'll talk about downside, we'll talk about upside. Looks like we're pretty cooked to the downside. So what if we get a positive reaction and go to that daily expected move upside? Let's talk about that for a second. Well, what will we be doing? Well, in this area, we had a cup with a small handle that led to a breakdown, right? So because that has broken down, we might want to retest that level. And we don't necessarily have reversal signals. You're not seeing a lot of reversal signals, and any 2-hour chart I show you is going to either look ugly or look like, hey, it's still waiting to curl up. So we'll pay attention to those things as we look at the individual stocks. But for now, for the SPY on the 30-minute, I mean, we really care about every single day of the market this week. So let's really get into it. Why would a test of this level make sense? Because we really broke down from that area. You see the massive breakdown from that area. So a lot of the time you might want to retest that level, and your daily expected move happens to be there. So if this 30-minute does cross, you have a good shot to go to that area, test there, and then look if there is some kind of rejection. That would be a 30-minute getting up towards that center line and maybe curling back down for the next move down. So that is something to pay attention to. The other thing is you're below that monthly. Yes, you have a 68% chance to land back in this zone, but it's by the end of the month. We are still only, you know, going into tomorrow, going to be September 9th. So we have a lot of time to work things out, right? Work things out and then get back into that zone. Okay, you could end up back in that zone towards the last day of September, and it would make sense. So that's your 68% zone. We're below it. The key thing here when we're pointing out these monthly zones is we're below it now, which means if we do react up to it, we can have resistance there. So not only on Monday are you going to have the resistance of the daily expected move, but if you do head up there, you could actually have the resistance of that monthly expected move stepping in, because we do use it as resistance. If we're going to see something continue to be crazy, well, then we might see more downside if we reject from that area. And that's the key thing I think you should be paying attention to for the SPY. Now, obviously, things can increase. I do want to say one bearish thing, which is actually on the daily scale. Things can increase very quickly if daily momentum is still taking over, and you can end up down at this weekly range in just a day or two, right? In just a day or two, you could end up down in this range. Now, I think Monday we will see a rip around kind of market, people trying to figure out, are we going to go higher? Are we going to go lower? And then we have a lot of things going on as far as Tuesday night. We do get GameStop earnings. We not only get GameStop earnings, we have the release racing or the debate on that night. And then also following day, Wednesday morning, we're actually going to get the CPI. So we have a lot to pay attention to around that time period. And I'm going to be trying to put out as much content as possible. As of right now, you need to be paying attention to the SPY because this could just continue. And the reason we're mostly going to talk about this continuing is because we don't see basing out signals here for the SPY. You just don't. And then the second part is you can now react up to a daily move and see that as resistance. If we do that on Monday, then I'm pretty confident to say, hey, if this 30-minute goes up to that daily expected move and we see a rejection, you're most likely heading to lower prices because your daily scale has turned over. And that means that there are sellers that are going to be selling every single rip. Okay, so until we see some kind of good news, some kind of basing out signals, we really have to keep talking about downside. And that's an unfortunate thing for a lot of people. But maybe once we get to AMC and GME, we can start to talk about some upside. EQs, just quickly pointing out, and I'm just not really talking about reversal signals because you don't have any, right? We don't have any down here for the time being, which means we might need to go create one. And the funny part about the Qs is right in that same area, we do have, now it's not necessarily testing a breakdown area perfectly, I would say, but it could test the bottom of where that cup really needed to go to. So we'll pay attention to this area. The cool thing about this one is it is by that monthly expected move. So let's get those actual numbers for you. 464.92 for the weekly upside expected move. And then we do have 432.46 to the downside. So you're seeing still a huge amount of implied volatility, not quite as much as last week, but it's hard to tell because it's a big move priced in. So that just tells me we can see some rip around moves. This market's really going to kind of go in both directions. That's what implied volatility does. It doesn't mean immediately something is going to go up, immediately something is going to go down. It just means the moves that you are going to see can be bigger. So pay attention to your signals very, very closely. The daily expected move 455.61 to the upside. We see that right up here by that monthly expected move. And then we have 441.77 to the downside. So a key thing here is the same thing we were talking about. We don't see reversal signals here. We have a 2-hour that's really beat up. It looks like it needs to cross up. If that can cross up and remain positive, maybe we see something crazy, but the way to head higher would be kind of carving out this left head, right shoulder, in my opinion, right? That would lead into the next week, which would be nice. But if we're going to continue because those dailies have crossed, well, then we might see some kind of bounce, and it might just be a dead count bounce, and we'll pay attention to that trap behavior with the dollar and the PCC with you guys live tomorrow morning throughout the day and do a closing stream so we can pay attention to it. But if we react to this area, this can be a great resistance. So watch out if this rolls down, right? If we see this curl up and curl down, pretty confident to say that the Qs are going to head to lower prices. Still need to see a reversal signal in order to head higher, in my opinion. Apple does have a little bit better of a look. You do have a low and you have a potential for a higher low. Potential. It is not confirmed yet, but if it would, it's really close to that center line, so we could see that reaction up, taking back to 25.84. So we're paying attention closely to this because if Apple is going to see that strength, maybe the entire market actually follows. Let's look at one of these 2 hours real quick for you just to show. Most of them look like this. The only other one that's different is kind of Tesla. So 2 hour pops up, you can see some kind of bounce, but you can easily see how that could be rejected from that 225 level, 225.84 level as well. So that's why we have weekly ranges. So you can see how high up the options market is pricing it in. We don't just make up those numbers. They change every single week. And we do look at that data in order to calculate that for you over on Patreon if you want to get that little range for Apple, which might not be a little range. There's a lot of implied volatility going on out there. So the 2 hour curls up. That can be a good sign. But where are you on this MACD? You're very low. We talk about this in the swing trading course a lot, but if you really understand the indicators, that can really help you out. And that's what we try to teach you in the courses. Those, I'm leaving them at 90% off because things are getting crazy and I want people to be able to learn. If you are taken off guard by any of this, I want you to be able to learn because we saw some great reversal signals that we pointed out on this channel. This right here is divergence. And we said, hey, Apple needs to hold up or else this market might be going down because Apple's a big stock. It's already confirmed it down. If you see a follow through, it's going to get ugly. You saw the follow through. This ended up curling down a daily chart. And that's where the momentum really picks up to the downside. So Apple really telling us early on, and you're seeing these type of signals. These type of signals are what we teach you how to trade in the course down in the description. The Using Technical Indicators course is only $100, but for $150, you can get both of those courses. Learn how to swing trade, learn how to use all these indicators, learn how to use weekly ranges, learn about divergences. There's tons of good stuff. Every video is going to be useful for you, and you can really start to become a great trader or refine. If you're already a good trader, to really refine those skills. So for now, if that 2 hour crosses up, it's down low on this MACD, which means I have to treat any pop as if it can drop, because if that just curls back down, that's not going to be a good sign for Apple. We did say on the 2 hour that Tesla did look different. It gave you a divergence. You kind of see that flatness even down a little bit on the MACD, and that flatness even down a little bit on the RSI, telling you this has weakness here. Now, the key difference between this and something like the daily scale for a lot of other stocks is this hasn't curled down yet. But if Tesla does curl down early on in the week, watch out below. You might be losing that 200 and heading down towards 180.92 pretty quick. Okay, so if that is something to watch, the daily scale for Tesla can roll over. It has the 2 hour divergence. As far as the 30-minute goes, that thing is beat up. It looks like it needs some kind of bounce soon, but it hasn't even got oversold. So we are heading into a zone where buyers have stepped in plenty of times, right? This is one of our zones. So if we're going to hold up for a moment here, what if we do get some kind of bounce and then that leads to another downturn, right? We do something like this. That can happen, so we'll pay attention to it. As of right now, nothing is really turned up on a 30-minute. We got to pay attention to Monday's price action, which is why we're going to be live watching these stocks, seeing if we're getting some kind of reversal in these areas for some kind of early week bounce that ends up being a trap. That would be a bad thing. Obviously, we have to pay attention to traps to the downside, but as the dollar is bottom, we're going to talk about the dollar after AMC and GME. As the dollar is bottom, the likelihood here is we are going to see lower prices this week at some point. All right, that could be at the beginning, that could be at the end of the week. So we just have to pay attention to the signals. As of right now, all of the signals are pretty damn bearish. Amazon, we see that a little bit beat up on the 30-minute, but not fully beat up, right? Not really beat up. So that can head to lower prices. We'll see if we get some kind of bounce. I believe if we get a bounce, we're going to test that 174 level, 174.50 that is, and then maybe we're able to make some basing out structure. But just note that this 30-minute isn't even oversold. It never even reached oversold. So that can just continue early on in the week. We see this 2 hour chart here. We said if the 2 hour for Amazon turns over, that's going to be a bad thing. And look at that, it turns over and it's a bad thing. Okay, so now this kind of happened at the same time. You more so wanted to follow the RSI on that one. Not necessarily the best trade for the 2 hour, but it has crossed down, which means the most likely direction as of right now with this price action is Amazon heads to lower levels. That's where it's going to help to have those weekly expected moves, because if you have a weekly expected move right here and you see this come down and then start to turn around, you might have a double bottom divergence down here and we might start talking about upside. So make sure you're subscribed, and thank you so much if you already are. Hopefully you're enjoying a lot of what's being said on this channel. I hope you're learning a ton. If you're not, please come into the live stream and let me know if you have questions. I really appreciate questions about this stuff, because overall this channel is dedicated to you guys being able to learn and also helping me learn as well. There's people in the chat who have told me things that I really have looked into, and I think it's very fun to just bounce off each other. Nvidia has a bigger implied volatility than most stocks out there, and it's a major increase. You have about double the implied volatility this week for Nvidia than you had last week, and it happens to happen when GME has its earnings. So my best guess as far as if GME and AMC are going to come to light in some way, if we're going to see a big move, is some kind of trap for Nvidia. And the reason that I'm saying this here that is because this 2 hour has a good shot to turn up, but look how deep it is on that MACD. Something we talk about in the course is the fact that it's going to be difficult to get this back into a positive trend where that MACD is. It's been oversold for a while now. It looks like some kind of bounce could come. People might think that's a bottom, and then we just see that reverse back down. So pay attention to that. As we could go all the way up and hit that zone, we'll pay attention to it. For the most part, though, on the 30-minute, the reason that we're talking about reversal for Nvidia, and this is why you need to pay attention in case we see some kind of bounce early on Monday, is just because it actually does have a reversal signal. You have seen some form of tapering here. Now, this looks a little bit flaggy. We'll see what happens with that, but you have confirmed 30-minute divergence on the MACD and RSI at the same time, which means you could see an extended 2 hour bounce maybe for 2 days. Okay, so we're paying attention to these things because we need to also look into if everything is increasing, is the dollar increasing? Are we seeing people get way too bullish way too fast because we're hitting a weekly expected move and see that PCC level go way down, as in people are buying a bunch of calls? So these are the type of things that we pay attention to on this channel. If you enjoy it, please give it a like because it really does help out the channel. But we can pay attention to these things together while we're live and see if we're getting any reversal signals to the upside, see if we're seeing any rigged behavior, as in the dollar is increasing while stocks start to increase, showing you that that, hey, some bigger players behind the curtain are actually selling their stocks. But I'd really be paying attention to Nvidia come around that Wednesday morning time. We will be live Wednesday morning to watch it with you. AMD almost did what Nvidia did, right? AMD kind of trying to do what AMD trying to do what Nvidia did here, creating some kind of little divergence on the MACD, just barely up there, and then very, very flat on the RSI, if not even a little bit down actually. So AMD is actually saying, yeah, I could get a bounce, but this bounce is most likely going to be what? Just a lower high. It really is. It's saying, hey, this 2 hour here that's been beat up for a long time can see a bounce for a couple of days, but watch out above because sellers could step in at any moment. So we have to pay attention to those things, and we'll be watching these things closely. Obviously, things change, but as of right now, it looks like a bounce that could lead into more selling is the most likely thing for a lot of these semiconductor stocks, and I want you to be aware of that. That's pretty much all you have to say about AMD. The last thing you would look at for AMD would be some kind of divergence on the daily scale. Okay, if we see some major selling come in this week and we see this drop down to something like maybe even 120, and then we see that reverse around after a couple of days, right? We see that go like this, you might have a daily divergence for AMD, and that's where I would pay very close attention because AMD has been down for a while now from that high, and it would be a great price if you see a reversal signal and that all completes and then we start to turn up on some bigger scales. That could be a good sign. The only bad thing, very bad thing for AMD that I want you to be aware of is the monthly scale is crossing. So if we continue this for the rest of the month, AMD might be an early indicator, as it does have divergence for this monthly scale, that AMD is about to see major weakness. And that's why you have to be very aware of what's going on this week and not get distracted. Have fun with the football game. Go eat, plenty of food and spend time with family, but make sure that once we open up on Monday, you are ready to go. Meta is one that looked like it had some reversal signals to actually take you higher, but look at that, 30-minute rolls over and things look pretty bad. So this is a 2 hour chart in front of you right here. We actually got a pretty big rejection divergence right here telling you, hey, downside is the most likely option. Rolling over this daily chart is the most likely option. That's what was said for Meta. And then we see that 30-minute cross down, and that means no more reason for upside. So we're just going to take a moment here to learn from Meta because that was some dramatic downside. When you do see this curl up, and you have some divergences or anything like that, just pretend this like right here has a very clear divergence. That curls up. That means you have a shot to reverse it around. It means you have a good probability to reverse around. But does it mean there's 100% probability to reverse around? No. So you have to be managing your trades. One of the things that people comment about my course a lot is the fact that the management of the trade section is very useful. A lot of people who trade do not manage their trades. They buy something, they hold it, and they hope it goes up. They buy something, they hold it, and they hope it goes down, right, with shorts. So how we can learn from something like Meta, we're going to teach you a little bit on how we talk about managing trades, which is if I see a signal that should play out to the upside and it starts to reject, I need to see if that fully curls down on the MACD. Okay, so we're seeing this curl down on the MACD at about 513. We see that curl down on the MACD. Where is it? It's very close to that center line. RSI already crossing that center line. So that tells you right now, once that does cross and that completes, the most likely place for Meta to head as far as price goes is down. Okay, so no reason for upside here, and there has not been a reason for upside in a long time. Even if you do get a reaction from the 30-minute here, it still does not have that strong of a base. You see no divergences down here. So really be paying attention to if this is going to the upside. Hey, that might cross, that might even go positive for a moment, but that could just curl down to create some kind of divergence before we see a bigger pop, or it might not even create that divergence, right? That's why we treat these curlovers as a bad thing, right? This time we did not create any divergence down here, right? Something worse happened, and that's why you have to learn how to manage your trades. But for Meta going forward, still think some kind of reaction to retest something like 512 would make sense. Really the breakdown area, in my opinion. So if we react up to 512, I want to be watching for any kind of small weakness, see if that curls back down on a 30-minute MACD to say, hey, we're heading to lower prices. Hopefully there's a trade setup with some kind of divergence, but I will treat it as bad as those daily scales are rolling over. This is something very freaking cool because we talked about it last week. We said these are times when you need to pay attention to AMC. 30-minute divergence down at the low, that crossed up. This can curl up a 2-hour chart. That is all things that were said on this channel as it was forming, and we said that right here. And then guess what? A 2-hour does curl up and we end at the high of the day. That is a big, big deal. And we see that 2-hour was able to curl up shortly after that divergence played out. One more dip down, maybe a management of the trade, and then we cross back up. But you ended at the high of the day. That's a very, very good sign. So we'll see if that can continue on Monday or if the stock is going to be suppressed. So before we actually talk about how this thing could actually be higher probability to see some kind of squeeze, we got to give you that updated level because they have changed a little bit drastically. So I'm going to go update that for you in real time here. We see AMC 556. So originally 523, 523, 523. Now we're all the way up towards 556. So you do have to get above 556 in order to see something crazy. What's a good signal that can tell you if you're going to see a price above 536? Well, that's going to be if this daily crosses, right? If we see some kind of day where we're just slowly going up like this and you see this cross, the next day, something crazy can happen. All right. We talked about that with GME. GME, we said right here, hey, something crazy can happen the next day because guess what? That's a massive green bar that curled up the daily MACD and boom, the next day you see an increase of 47%. So if you want to see something crazy, you got to be curled up on daily MACDs for AMC. The good part for GameStop is it's already there, right? It is already there. It's not closing at the high of day, but it's already there. This is a bullish signal because you are crossing up above all the moving averages. You're crossed up on the MACD and you're trying to go positive at this moment. So you're trying to go positive here. That is a good sign. This looks like a simple swing trade to me, which is down in the description, but the 2-hour is kind of a big deal here. Now, the reason the 2-hour is a big deal is because not only is it crossing up saying, hey, I'm going positive, I'm ready for a big move to get past the updated level we're going to give you in a moment, but I also have a 2-hour divergence here that's kind of flat. Like it's pretty flat, so it could be some kind of double top. We'll see if the 2-hour rolls over. If the 2-hour rolls over, it means not the moment. 2-hour curls back up. That can be a good sign. Obviously, we have earnings. Anything can happen with earnings, so we need to update this level for you so you can see where a gamma squeeze can take place. And this has increased dramatically. Remember, I said not only did Nvidia's increase dramatically with implied volatility, but so did GameStop. And that is coming in at 29.06. Okay, so you have a bigger move, almost a $5 move, or about $4.20 in order to actually see, know that something crazy is happening. So that's your updated level. I would really pay attention if a 2-hour crosses over because that could mean it's not looking good. Just a quick note, I have researched GME and AMC, especially the AMC move because that took place mostly during market hours. So I've studied the AMC move. The thing that happened a lot during this move was you had a major upside move on the 30-minute. That 30-minute, when it did experience craziness and went from small amounts of money to hundreds of dollars within a day or 2 days, you never really saw the 30-minute cross back down. So if you are seeing a 30-minute cross back down, you know pretty well that's not the moment. And then if it curls back up, that would tell me, hey, is this thing close to that center line because we got earnings, and that might be a big move coming if that 30-minute can cross back up. So during the last squeeze, it went up and up and up and up and up, and the 30-minute never crossed back down. When it did, the price started to fade dramatically. Okay, so what you can pay attention to, even if you're trying to take profit in a lot of these moves, by the way, is maybe pay attention to a 30-minute. And if you see that curl down, you go, okay, now we're going to see a pullback in some way. And if that turns back up, maybe I can take another play. That's what I'd be looking into for GME and AMC. Now, this week, we are going to pay a lot of attention to the dollar, mainly in the shorter time frames, but we're just going to talk about it here for a second. We're looking for, if we do see a pop in the market goes higher, Nvidia goes higher, maybe we test early on in the week, we test like a monthly expected move downside or something for the SPY and the Qs. We're going to be paying attention to, is the dollar increasing while that is happening? We told you that this dollar was bottoming out. We saw a flash move down, and then we see that start to spike back up. So you see some selling come in. Now we want to see, is that going to happen at the same time? Because if certain people are flying to cash, people with maybe more money are flying to cash, yet retail is flying into stocks at the same time, that is what you see before a rug pull. Okay, so we're going to be paying attention to that rug pull behavior this week, seeing what's going on with the dollar, and we can use the PCC in order to do that. Let's go pop over to volatility, just showing this on the daily scale one more time, showing you that we've notified you the crash signal has formed. What can you look for? A short squeeze is coming. Look for a reaction down towards the 200. The 200, we get that reaction, we curl back up, which just tells you, uh-oh, things could get really ugly. Now, I thought maybe we would see some kind of move down first again, but looks like we could just be breaking out really, really fast. So pay attention to this. This is going to be important on the daily scale. If that daily does rotate down, that could mean we are going to see some kind of squeeze again, maybe even come below the 200, but we always have to be open to reactions by the 200 from volatility. Just a quick note, that's still crossed though. So as long as this crosses and this 50 doesn't cross back down the 200, well, then you still have that crash signal there for you flashing red, red, red. As we go look into a 2 hour, we could see some kind of move from the 2 hour. I'll be paying attention for any kind of divergences on this 2 hour right here, because that can really roll over a daily chart. So we're paying attention to that, but pretty flat here. So I don't know if you're going to actually make a divergence. Now on the 30 minutes, something to note here is you've made a bunch of divergences with these levels. So that is something to pay attention to. It means the 2 hour could experience a pullback as far as volatility goes. So the main takeaway here is going into Monday, everyone, according to this PCC, is really thinking there is going to be a continued crash, and they could be 100% correct because we are seeing signals that there are no basing out signals, and we could actually just end up keep going lower with that daily momentum taking you down. So we have to be aware of downside, but we're looking for reversal signals. If that ends up being some kind of projection up throughout the first day, then we need to pay attention to those daily expected moves to see if that stuff is rolling over to go create those stronger bases in more stocks, not just Nvidia and sort of AMD. 2 stocks showing like that. Usually we need to see 4 at the same time in order to actually get that downside. Obviously we can V-shape at any time. Nvidia would be a good stock to show you some kind of reversal in order to V-shape. So we're going to be paying close attention. I encourage you to come back tomorrow morning to watch some stock market behavior live with us, because we do talk about a lot of things. You can ask me to look at any kind of stock and I will look at it for you and give you my honest opinion as far as momentum goes. Thank you so much for watching. I really hope that you guys found this video helpful. If you think you want to learn more about this style of trading where we're looking for divergences, playing around weekly moves and taking out those positions, well, then you can go down in the link in the description. There is a swing trading course and a technical indicators course. So how to use all the stuff we talk about in these videos is in that course. If you take both of those, you can get both for $150. The value of that is probably somewhere more around $2,000. So it is on a huge discount as volatility is higher. I wanted more people to be able to learn. So thank you guys so much for watching the video today. I hope you had a great weekend and you're ready for what's to come this week. It could get a little nutty, so I'm looking forward to it tomorrow with you guys live. All right, guys, have a good night. Peace.